Over the buyout will be dismissed. It was over a $900 million termination fee that Sallie Mae had sought from bidders led by J.C. Flowers. Stuart Plesser covers Sallie Mae at Standard & Poor's. He joins us now from their offices in New York. Stuart, thanks so much for joining us.
Thanks for having me.
Let me ask you about this $31 billion. It does replace the line of credit. Did you expect it to come this early? Is this a little bit earlier than you thought you might see this? February 15th, of course, was the deadline.
I think they hinted on their fourth quarter conference call that that there was just a few things left in place before it happened. So no, it didn't come as a surprise.
Was it clear that the lawsuit would be abandoned in this? I mean, Bank of America was also part of the J.C. Flowers group. Now they're part of this credit here. Was it clear that that would go onto the table with this? That
wasn't clear. I guess in hindsight, it does seem clear that you know, this would sort of be some sort of payback for the failing of the buyout, and this was some reciprocation in sorts.
I wonder about, we were talking a little bit during the break. I was asking if it was a victory for Sallie Mae. You say it's really a victory for the new chairman who was brought in to deal with this. Why don't you tell us a little bit about that development and how it looks in his record?
Well, I think that he had banking history in his past, and he was brought in to really secure this deal and bring order to the company after the CEO, Mr. Lord, sort of brought some rancor to the investment community. So this is probably a step in the direction of the chairman in terms of negotiating this deal.
I mean, it's definitely something that's going to help keep Sallie Mae alive and kicking, but is it a good deal for Sallie Mae?
I think right now it is a good deal in terms of, I think they were thinking of survival at this point. Getting this interim financing under turbulent markets to raise this kind of money in this market is not easy. It's a one-year deal under the terms are not as good as what it would like it to be, but it definitely gets them through 2008, and they'll probably look to refinance this when the credit markets calm down under more favorable terms. But it's definitely going to put pressure on margins in 2008 because of the terms of financing.
You know, I mean, they already reported a big loss, I think $1.6 billion for the fourth quarter. Can Sallie Mae turn things around before it has to go ahead and refinance this? I mean, is that what the game plan really looks like?
Yeah, I think 2008 is a transition year. There's a lot of moving parts. They're going to move more heavily into the private student loan business. The spreads on their federal student loan business are thin, especially with the financing. But I think they just want to keep the business moving. And once they're able to procure more favorable financing, I think the spreads will widen, and I think they'll be able to show some creditors that should be the case. And I think that's their game plan in 2008.
All right. Hey, Stuart, thanks so much for joining us. Stuart Plesser there from S&P.
Standard & Poor's joins us.